A ton of you have been asking, Colt, how do I properly use the Fibonacci's and what are your Fibonacci settings? In this video, I'm going to break down exactly how I use the Fibonacci's and how you can replicate this exact strategy that I use to get the most perfect entries. Before we start, if you guys do want to be mentored by me, I do offer one-on-one mentorship, but the only way for you to see if you're qualified is to click the link in my description and book a phone call with me, and we'll see if it would be a good fit for both of us. Lastly, if you guys could show some type of love, like this video, drop a comment below, or subscribe to my channel if you haven't already. Now without further ado, let's get into the video. Okay guys, first things first, the Fibonacci is a great tool. I use it to find really key entries, and you can use the Fibonacci on any time frame, any pair that you want. It works great. But the way that I like to look at the Fibonacci, let's pretend like there's no charts over here. I like to look for lower lows, and then once I see a lower high start to be formed, this is when I'll get the fibs. I'll get the high here for the fibs and the low here. And I want to have my key levels for the fibs right in here. So I'm expecting the market to come and hit this level, enter me into the trade, and then form a new lower low. So that's the overall way that I use the Fibonacci's, is I want to see a lower low and a lower high start to be formed. And that's going to give me a lot of confirmation. And you can use this if you already see a lower high being formed or a higher low. So right here we have the lower low and lower high set up for the fibs. But what about the higher high and higher low? We have a higher high, higher low, and then once we see a new higher high being formed, that's when we're going to bring up the fibs. So right here we would have the fibs to swing high, then we would have the swing low, and ideally what we're looking for is it to come down, maybe right here, or a little bit deeper, and actually go up. This is just a graphic depiction. I know my graphics are like a freaking second grader or a third grader, but it's fine. You guys are going to see in the charts in just a second what I mean. And our key levels will be right here or right here. So mainly what I'm trying to get at is I'm using them for a lower high, or I'm using the fibs for a higher low. This is the best way to use the Fibonacci's. Now let's get rid of all this stuff right here, my third grader drawings, and let's actually go to the chart. But first things first, let me show you the Fibonacci's. So we have to go right here to the fib retracement. I have it starred so it's right at the top. And right here, if I just bring it on the chart, I want to go over the settings. I want to give you guys all the information that you need to become successful and to properly understand what I am teaching. So what we're going to do is go to the settings on the fibs, and I want you guys to copy everything that I'm going to show you right now. Take a screenshot right now, then take a screenshot right now. And what you guys are going to need to do is add in all these levels right here. These are key levels right here. Very important, and I will explain it all to you. Take a screenshot right now. Guys, your fibs are going to be looking so good after this. The coordinates, I think, are pretty much the same. Visibility, yeah, this should all be preset already. The style, you guys just need to change. So we got that. Okay, so we can already see we have a couple of lower highs being formed right here. We have high right here, but then look at this, lower low, lower high, then a new lower low. This point, this wick goes deeper than this point, and then it makes a new lower low. So let's start with this first one because there's a lot of different levels. Like the retrace on this one isn't going to be as deep if we have the high up here and the low here as if we have the fibs right here and right here. And this was our retrace. So let me show you exactly what I mean. Okay, so we have the fibs right here. I would go from swing high to this wick to the bottom, this wick right here, and I like to extend into the future right there. So we go from the highs wick. I use a wick, I don't use a body. Then we have the bottom wick right here. And ideally, let's say that this is current market price right here. We're like, all right, well, if we see the lower high being formed right here, what I'm going to do is I want to have a sell limit set. So the key levels, let me explain this to you guys. The key levels that we're looking at for this tool are going to be these three key levels right here. We have the 0.79, 0.705, 0.62. I have my 0.62 in red because this is the most accurate level that the market's going to hit most all the time. So what we would do is you guys could have a sell limit set right here. Okay? I'm going to have my stops right above the 100% level most all the time. And then my take profit is always going to be at the negative 0.27 level right there. Now here's my setup. This is a pending order sell limit. Let's see if we go and hit it. Okay, so let me see if that actually hit. I don't know if that did. No, it didn't hit our sell limit. It's completely fine. Okay? So this one didn't work out. Wouldn't be a good trade. But now we have a new lower high being formed. So we get our fibs right here from this wick down to the bottom wick, extended in the future. And we can see if this is current market price, it's already hitting 0.62. So what we could do is drop a sell, a market execution right here, have our stops above this high, take profit right here, play it back, boom. So this is how you know that your fibs are set up correctly, because when you see a very quick move away from those zones, that means the fibs are set up absolutely perfectly. This is what you guys want to see. When the market just taps on 0.62 and then big falls to the freaking floor. One more candle hits TP, boom, TP hit. So now let's keep going. I think there was one more lower high right in here. Okay, so what? Look, we have our lower low. We have a doji that's telling us it should be going up. But what I want to see is some type of bullish candle to really give me confirmation it's going to go up. Okay. Okay, we have this bullish candle right here. I'd count that. So let's get our fibs from this wick right here down to this wick right here. Then what I'm going to do is set a sell limit right here. Stops above for 100%. TP down here. This is going to be a nice chart. If this hits our 0.62, this would be a really nice setup. Oh, barely missed it. So that's the thing. It's not always going to hit it, but that's completely fine. I don't like using the 50% as an entry level because that's qualified as equilibrium. That's like where the market's in an equal state. But this is overall how you use the fibs on a very amateur level. So that was for a downtrend. Now let's find an uptrend where we can use it. And we want to find some pretty volatile markets. Okay, here's a really nice setup. I like this one right here. So we can see we have this lower low. Then we're going up for this higher high. Now we can see the bearish candles coming in here. This is where I'd set up my fib. So I'd go the opposite direction though. I'd go from the low first. Then I'd go to the high right here. Right there. And then I would have my pending order set. So I'd do a buy limit. Right here. And you guys can also have multiple orders. If you want like a buy limit at the 0.62. Then you want a buy limit at the 0.75. Then a buy limit at the 0.79. You guys can do that. It's completely up to you. Stops right below the 100% level. Take profit up here at the negative 0.27. Let's play it back. Boom. So wait. We can see that it came and hit all three of our levels. Let's zoom in here. Zoom in. Okay, so we can see this candle right here. Look how it went and hit our 0.79. 0.705, 0.62. Boom, came and activated them all, then pushed away. Very nice. Now we can see price. Look, that's how you guys know you're on the right side of the market when it just hits it and it moves away very, very quickly. Okay? Bullish engulfing right here. Look, price is still going. TP will be in. Boom, TP head on this candle. Guys, the Fibonacci is a great tool if you know how to use it correctly. What I'd recommend that you guys do is go back, test this out, and see if it works for you. But once again, guys, if you know how to use the Fibonacci, you guys can get really prime entries. Very, very nice entries. But I will see you guys in the next video. Peace out. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.